After weeks of bad performance on the stock market, then we're finally back. But even though the market is doing really good right now, then there is still some dividend stocks out there that is trading at a great value. And I found 4 discounted dividend stocks that potentially could be the perfect pickup for your portfolio. So getting straight to the first one on my list. And here we have a real estate investment trust. And that is Vici, ticker symbol VICI. And this is a REIT that owns some very iconic real estate buildings in Las Vegas. And they do own the Caesar Palace, New York, MGM Grand, Mandalay Bay, and many others. And just like all other REITs, then have Vici been heavily impacted by the high interest rates that have made investing into real estate more expensive and less profitable. But they have actually performed pretty well recently, and they're now down by 7% year to date. And I'm not the only one who thinks that Vici is looking really good at the moment. As the analyst, they have forecasted an average share price of $34 within the next 12 months, and that is an upside of more than 15%, and that is pretty solid. But until that increase in the share price, then you're gonna get some great dividends from being invested in Vici, as they currently have a dividend yield sitting at 5.61%, and that is pretty good. And they have a 5-year growth rate in their dividends sitting at 7.76%, and that isn't too bad either, especially when taking into consideration that they already have a very high dividend yield. And they have been increasing this dividend every single year for the last 5 years in a row. So moving on to the second company on my list, and here we have one that I haven't really talked that much about before, and that is Zoetis, ticker symbol ZTS. And I just discovered this company recently. And just in case you don't know what Zoetis is, then it is the world leader within animal health, and it was established as a spin-off from Pfizer back in 2018. So a pretty new company in that sense. And they are basically producing vaccines, medicine, and all of the sorts of animal health products. And Zoetis has had a really bad share price performance during 2024. And they're now down by 20% year to date. But even though they've had a pretty big loss, then is their financials looking very solid at the moment. So I do think that Zoetis is a really good buy at the moment. And the analysts, they do agree with that. And they have rated Zoetis as a strong buy at the moment. And they are forecasting 17% of growth within the next 12 months. And that is pretty good. And because Zoetis is a pretty new company, then are they not paying that much dividend yet. But they do have a dividend yield sitting at 1%. And they have a payout ratio that is below 30%. And that is really good to see, because it means that they can very easily increase their dividend yield going forward. And they have consistently been increasing this dividend every single year for the last 5 years in a row. So moving straight to the third company on my list, and here we have Home Depot, ticker symbol HD, and this is the leading home improvement retailer in the US, but they haven't really performed that well recently. And that basically all comes down to their consumers postponing their projects. And that is due to uncertainties about the overall economy when it comes to the interest rate, the inflation, and so on. And looking at the share price performance, well, then we do see that Home Depot is down by just above 1% year to date. And they are right now trading at a price to earnings ratio of just 22, which I do think is really good for a company of this quality. And the analysts, they do agree with that. And they have rated Home Depot as a moderate buy, and they are forecasting almost 12% of growth within the next 12 months. But Home Depot is really good when it comes to dividends, and they currently have a dividend yield sitting at 2.58%, a 5-year growth rate in their dividends of almost 14%, which is absolutely amazing to see. And they have been increasing this dividend every single year for the last 14 years in a row. And moving on to the fourth and last stock on my list, and here we have the dividend king, Johnson & Johnson, ticker symbol JNJ. And this is a giant pharmaceutical company that is known all over the world for their products and especially for their vaccines. And if you are a dividend investor, then you most likely know about this company, because Johnson & Johnson is one of the most famous dividend paying companies out there, and it is a staple in so many dividend investors' portfolios. And looking at their share price performance, well, then is Johnson & Johnson down by just above 1.5% year to date, and they are right now trading at a price to earnings ratio of just 14.5. And I do think that Johnson & Johnson is a great buy at the moment, and the analysts, they do agree with that. And they have rated Johnson & Johnson as a moderate buy at the moment, and they are forecasting more than 13% of growth within the next 12 months, and that is pretty good. But until that increase in the share price, then is Johnson & Johnson gonna pay you some great dividends, and they currently have a dividend yield sitting at 3.25%, a a 5-year growth rate in their dividends of almost 6%, and they have consistently been increasing this dividend every single year for the last 61 years in a row. And that is absolutely insane to think about. And that makes Johnson & Johnson a dividend king. And that is also why Johnson & Johnson is often referred to as being the holy grail of dividend investing. And that was all I had in this video. Please leave a comment below and let me know what stocks you're looking to buy at the moment. And don't forget to like the video and subscribe for more content just like this. See you guys in the next one.